Hi everyone, you're all very welcome to another educational post here at the Alpha Capital Group. So in this video, we're going to talk about trading plans. Why are trading plans ultimately so important, and how to look to develop and create an effective and efficient trading plan for you. So obviously the title of this video is a strategic trading plan is a roadmap for success. Now, what does that mean? Well, when market participants, traders come into the markets, one of the primary reasons as to why so many traders fail is not just because of discipline, it's not just because of their understanding of the markets, is because in most cases they don't have a plan. And the typical usual analogy, fail to prepare, prepare to fail, is a very, very common theme within the financial markets. And it's really, really important to make sure you have a trading plan, because that gives you the backbone, that gives you the structure as to what you're doing, why you're doing it, and making sure you've got clearly defined goals and objectives set out. Now, a strategic trader, a strategic trader is a trader who never trades without a plan, simply speaking. Okay, it's important to make sure that there's clear parameters as to what you're doing, why you're doing it. Now, a trader that enters the markets without a successful plan is like someone trying to run across a busy freeway with a blindfold on. You need to be able to make sure that there is a very, very clear understanding as to what you're doing and why you're doing it. Now, while having a plan is essential, okay, now absolutely it is very, very essential, simply having a plan isn't going to guarantee you success. Okay, naturally there are good plans and there are horrible trading plans, so it's important to develop a plan that is yielding efficient results, is yielding profitability, and is going to allow you to achieve the longer term goals and objectives. Okay, now this video is going to help you distinguish between obviously the two, help to develop winning formulas, help to develop structured plans to work for yourself. So whether you're a short-term trader, whether you're a higher time frame trader, whether you focus on specific assets, or whether you look at the markets in a broader consensus. Now, developing a strategic trading plan can be a very, very challenging task for many. Okay, absolutely. It's not an easy thing. It's not a quick fix. It doesn't come overnight. It takes time. It takes preparation. It takes the trader the ability to review their data to ensure that the plan is successful. So it doesn't come overnight. It's not a get rich quick scheme. It takes time. It provides a systematic building block approach for designing, developing, testing, and executing the plan, right? The execution obviously comes further along the line when you talk about psychology. And of course, we have our other psychology video, which talks about the mental mindsets as well. Now, the idea of creating a sustainable, longer term successful trading plan, you have to be able to look at some very, very important themes as to what goes into a plan, how you lay it out, why does it become so structured, and what's ultimately needed to ensure that you're getting those longer term results, longer term successful approaches to the markets. Okay, now of course, if we turn the slide, you will see that there are 9 kind of key themes which look at how to develop a trading plan. Now, of course, the first thing you need to look at is developing your goals and objectives. Okay, the old analogy of Rome wasn't built in a day. You have to be able to see it as a long-term approach, right? You're not going to yield profits in 1 week or 2 weeks. It takes time. Some it takes years, some it takes months. Some who are very, very lucky can pick it up in weeks if they're lucky in that regard. So it's important to be able to develop clear goals and objectives, right? What's your risk? What is your profit targets? What's your risk targets, right? Being able to quantify those goals and objectives gives you an initial offsets. Okay. The second thing is we look at capital requirements and investment. Okay. So if you're trading private accounts, if you're trading funded accounts, what's also very, very important here is to understand, right, what actual avenues of capital have you to play with? What have you to work with? Because that then determines everything else beyond that. Okay. So of course, if you're trading a 10K account, or you're trading a 20K account, or you're trading a 100K or 6-figure account, it's important to be able to quantify your capital requirements. Okay. The third element is the idea of risk tolerance and risk management. Okay, for me, risk tolerance and risk management is the bedrock of a sustainable and successful trading plan. And even when I developed my own trading plan, risk management and risk tolerance was the first thing I looked at. I talked about, and we talk about it as well in our risk reviews, our daily exposure. How much do you really want to risk feasibly? How often, how many positions do you take in the day? So therefore you can quantify your average position sizes. You can quantify how many trades do you foreseeably really look to take in the markets. And of course, then you can have a cap or a maximum exposure, which caps obviously downside risk in the markets. And of course, that's the idea of capital preservation, retaining as much information as possible, obviously retaining as much capital as possible as well, and obviously limiting the exposure, limiting the risk, mitigating the risk. That's very, very central. Now, in addition to that, then you have to look at what makes your strategy tick, right? What makes your strategy work for you, right? Selecting the trading style and techniques that you're going to implement, right? Whether it's supply and demand, whether it's trend analysis, whether it's scalping, whether it's smart money concepts, whether it's Elliott wave, whether it's news, fundamental traders, okay? It all depends on you and what you find efficient and what works for you, okay? Being able to develop that initially is one of the key offsets. Now, after you develop it, you need to then be able to test it, right? Because how do you know if you've developed a plan and it's actually going to yield the results that you're looking for? So let's say, for example, you've set out your goal and objective is to make 3% per month. Well, how do you know if that trading plan is going to yield those results until you test it, until you evaluate, is this strategy under the current conditions that I've devised yielding the results that I need to be successful, or yielding the longer term goals, the goals and objectives that you set out within your plan? Okay, that's ultimately important. The next thing then is your time and resource commitments. Now, what does it mean by time and resource commitments? It's feasibly, how much time can you devote to trading? Are you doing this as a side gig, or is this something that you want to become professional at? Right, that's the first thing. The second thing is the resource commitments, right? What other external elements that you have to put into trading? Do you have to pay for education? Do you need like an accountability buddy? Do you need to have someone there who's making sure that you're not breaking your risk protocols? Okay, simple things like that. Is there any other commitments that you need to factor into place which implicates upon the success or failure of said plan? Okay, now, other than that, then you have to look at the idea of personal assessment, strengths and weaknesses, right? So when you look at your plan, how is the trading plan quantified to you? How does that work, right? So personal assessment of strengths and weaknesses, right? When you take X amount of trades, is it proving successful? Where is things going well for you? Where are things going poorly for you? Or where can you improve, right? Because it's all about, ultimately, the longer term goal is continuous improvement, continuous evolution, and continually refining your plan, making it more efficient, making it more profitable, right? There's never going to be a case where you've reached the top of the mountain and that's it. Your mission is complete. It's never going to be like that, because the markets are constantly changing. The world of trading, investments, finance are constantly evolving day in, day out. So you need to evolve with it. You can't plateau, because when you start to plateau, that's where traders will reach their peak. And that's ultimately where regression in performance, regression in terms of the trading plan will actually start to occur. Now, in terms of strengths and weaknesses, there's a simple tool called SWOT analysis. So SWOT is strengths, weakness, opportunity, and threats, right? So they're something else as a framework in academia, in obviously strategy that you could use to implement to obviously test the validity of your own performance to the trading plan that you're currently carrying out. Now, the second penultimate element there is being able to measure performance, right? So after you've designed your plan, after you've put it all together, after you started testing it, you need to then be able to say, well, is it meeting my goals and objectives? Is it giving me a positive net return, right? So this is where we talk about in trading risk reward. So one of the elements in trading is within risk and opportunities is, do you get a net positive risk reward where your risk reward is greater than 1? So that could be a tool that you could use. Other tools is, well, what's my profitability? What's my win rate, or what they call the hit rate in trading? So your hit rate is how often do you win, right? So what's the numbers? What's the probability that over 500 trades, over 100 trades, over 1,000 trades, will you be successful? So it's important to be able to quantify and measure your performance, measure your results to determine, is this strategy going to be successful? Because nobody knows whether their strategy is going to be successful until you actually put it into a regimental routine and being able to say, well, under market conditions, this is what I do, okay? And then, of course, you can be able to measure those results accordingly. Now, the final thing is then being able to improve and develop your plan. So this is what I mentioned a couple of moments ago, is it's important to then be able to say, well, over time, I know that I'm going to have to improve my plan. So when I started out personally, I was risking 2 to 3% per trade. I dialed that risk down. I'm now risking somewhere between 0.5% to 1% equity per trade. So that's a simple development and improvement that I've put together over time. Other developments could be say, well, I'm going to look for an increase in risk reward. So if you have, let's say, a 1-to-1 risk reward, you say, well, over time, if I try and push for a 1-to-2 risk reward, does that influence or impact or enhance my overall profitability, my overall performance? And that's really something as well to take into consideration. Okay. Now, those really are the bedrock of really every important trading plan, right? Being able to structurally say clearly, this is what you're looking for. This is obviously why you're looking to achieve those goals in the long run. If we progress to the next slide, we can also see that there are some important additional considerations that needs to be taken into consideration when developing your trading plan, right? So if we look at individual psychology, if we look at personality traits, right? Having clearly defined process, we've talked about that, and obviously the different 9-step process, right? It's important to have a very, very clear process, because almost every trader knows that the key to make money in the markets is simply to buy low and sell high. Right? That's the clear logic of the markets. Yet so few traders are able to do that successfully. Okay, why is that the case? Everyone knows that trading the markets without a proper education or without a proper even plan is very, very risky. So it's important to make sure that you have a very, very clear trading plan before that obviously happens. Okay. Now, individual psychology and personality traits have a profound impact on performance. Okay. We talked about it as well in our psychology video recently, that it's a holding yourself accountability, making sure that there's a clear mental mindset, staying on tilt. Okay, these are important and relevant themes that we've talked about in previous videos. Okay, so it's, unfortunately for a lot of individuals, behaviors and mental stress can very much sabotage even the best of strategies and the best of traders. So it's important to make sure that for strategic traders who have longer term aspirations of success, you must learn to develop mental discipline, winning habits, as well as obviously making sure that your strategy proves to garner positive net return results within your strategy. So then confidence, precision, accuracy, those are important themes and important elements of consideration, which very much factors into that. And of course, we have a set breakdown of different things we need to also go through. So it's important to have realistic and achievable personal trading goals. You need to make sure that your targets are realistic. Okay. Also, to identify your comfort and risk tolerance levels. That's also very, very important, because of course, the more risk you assume, the more of a potential avenue for failure, because maybe those levels of risk that you're taking, those elevated levels of risk, you aren't comfortable with. Okay, so it's important to know that as well. It's important to develop discipline and patience, something that we've just talked about a minute ago. So holding yourself accountability, but making sure that you've got the right strategy that makes you tick, that makes you get that edge, that trading edge that so many guys, so many psychologists, so many professionals talk about, developing a trading edge, right? Then you're able to evaluate your own personal expertise. As time goes by, you're able to develop, do I have sufficient knowledge? Do I need to maybe look at certain aspects to increase knowledge? Okay, that's also very, very important. Additional elements there is being able to deal with accepting of losses and mistakes, because we know there's not one strategy out there that's 100% foolproof. If someone is trying to sell you on the internet a trading strategy that wins 100% of the time, it's most likely a scam. So just do be aware of that. So it's important to know that when you talk about efficiency, when you talk about importance, knowing that losses occur, knowing that not every trade is going to win, but it's how you manage those losses. So there's 3 scenarios in the markets. You either want to have very, very small losses, break even, or very, very nice winning trades. Those are generally the 3 scenarios that traders would like to have in the markets. Okay, so it's important to obviously know that. Then the next consideration is then control what you can and avoid what you can't, right? You cannot control every single aspect of the markets. The markets are going to do what the markets are going to do. So it's important that when you have your stop losses, when you have your risk protocols, when you have tolerances built in, when you have the use of stop losses, it allows you to control, let's say, well, if the markets does X, Y, and Z, I'm going to win. But if it doesn't, I'm going to have my stop loss at a specific level. So it caps the risk, it minimizes the exposure in the markets and gives yourself that idea of, well, this is how I need to do it to be successful, to be efficient, to be profitable. Okay, mind tools is really, really important as well. So obviously letting winners run, right? That's the one thing we kind of look at as well. Maximize your score, maximize performance, right? There's no point having a successful strategy that wins 90% of the time if your risk reward is, let's say, 0.1, 0.2, because it means then that you need to win 90% of the time just to be break even. That's not a successful trading plan, trading strategy. So you need to find that kind of common ground between having as high as possible as a win rate or a hit rate, but also making sure that what are you risking per trade, making sure that you're able to garner, as I said, a net positive return on your strategy. Otherwise, then when you do have losses, your losses aren't what we call small losses. They tend to be cripplers. They tend to be very, very difficult and very, very hard to come back from, both from a monetary perspective, a percentage perspective, but also from a mindset perspective. Okay, and that's one of the reasons why we do the risk reviews as well, because so many traders look at the win rate and they don't look at all of the other avenues as well that should go into a trading plan, should go into having that consistency. Okay, the last thing then is being able to avoid behavior and sabotage, right? So making sure that you, as much as possible, keep a clear mental mindset. So that's the idea of, we talked about in the psychology video, accountability, journaling, disassociation, just to name a few topics that you can kind of consider. It's all about building positive mental mindsets, that you know you're not going to win every trade. You know you're going to have a bad week. You're probably going to even have a bad month. I've yet to come across a trader who hasn't even had a bad month. Okay, they come eventually. Everything runs in cycles. You're going to have a period of euphoric moments where a run where you're going to win trade after trade, and then you're going to have a run where you lose 3-4 trades in a bounce. But it's all about minimizing the exposure, minimizing the risk, but also making sure that you know that there will be a time where a bad run comes, but it's how you control that, how you control the mentality of it, and the neurology behind the decision-making process. And that's really, really important as well. Okay, so with anything then, we then look at the final element, and in terms of a strategy, right? Strategy is the mind at work before we actually action, right? So trading strategies, it's all about helping traders to control and keep their emotions and trading in check, right? That's the process, right? Whether you're an institutional trader, whether you're a market maker, whether you're a floor trader, whether you're a retail trader, whether you're Billy trading in his room upstairs in his mom's house, it's the same thing, right? Every trader should have very, very common traits, and they use a clearly defined strategy. Clearly defined strategy with a clearly defined plan. And that's really, really, really important, because, as I said, it's all about building, creating, and constructing that winning edge, okay, without all processes. Now, as I said, trading strategies help traders to control and keep their emotions in check at all costs within the trading process. And that's really, really, really important. Now, a successful trading strategy identifies the trading opportunities, decisions, tactics, and parameters for action, right? What are parameters for action? Where you get in, where you get out, where's your TP, where's your stop loss, where's your entry, making sure that's you've a regimental approach. Okay, whether that's the use of an indicator like ATR, or whether it's MACD, or whether it's RSI, or whether you're using raw price action, doesn't matter. It really comes down to you as a trader to making sure that works. There's a probability of success, okay, and that's really, really, really important. Now, provides an opportunity for traders to learn how to identify trading setups and select the right strategy for the market conditions. And that's really also important, because, of course, then using the power of confidence to create high probability success. So as I said earlier, it's not just about having a 90% win rate, but can you have a constructed, manufactured success rates that yields a net positive return when you talk about what your risk per trade, what you get back. And that's also really, really, really important. So that's why the idea of, to develop a trading strategy, you need precision, you need execution, you need skill, but you also need to ensure you have discipline to stick to the specific structure to make sure that the strategy or the approach that you're using yields a net positive return. So you need to look at all of these aspects. And that's really, really what's important. And of course, that comes from technical minded people, comes from fundamentally minded people, but also from a risk, discipline, mindset, strategy, and the ability to be able to create longer term goals and objectives. All right. So guys, I hope this video, and ladies, I hope this video has been helpful for you as traders following along. Of course, feel free to subscribe, hit the like button, and of course, we'll be back very soon again for more content on our channel. Take care. Have a great week.